Hello everyone. Today I'm bringing you a topic that has been very trendy on social media lately, and I'm talking about Candle Range Theory. Basically, it's a trading theory or model that was made viral on Twitter by its creator, and many people claim or explain that it is the holy grail of trading. We're going to talk about it, we're going to explain it, and we're also going to clear up a couple of things, okay? So get comfortable, because this is a fairly detailed video. And if you truly want to trade this model properly, I need you to pay very close attention. Let's get started. First of all, it's extremely important that you understand that there is no such thing as a holy grail in trading. In other words, if you didn't achieve profitability with a strategy, any strategy that is approved and considered profitable, then it's most likely not the strategy itself, but rather your risk management, your psychology, or your understanding of how that strategy works. The Holy Grail, the sacred grail of trading, does not exist. In fact, Candle Range Theory, or CRT, is literally AMD, or the power of three explained in a different way, just with a nice name. Having said that, let's talk a bit about what CRT actually refers to. CRT comes from Candle Range Theory, which basically explains that every candle is a range. In other words, every candle has its own power of three. What is the power of three? Accumulation, manipulation, and distribution. That is essentially what Candle Range Theory is based on. As you already know, and as I've explained more than 5 times on this YouTube channel, a candle is made up of an open, a low, a high, and a close, assuming this is a bullish candle, right? And basically, it explains that if this is a daily candle, price has this movement. It does this, it distributes, and it closes, okay? This is CRT. Why? Because here price performs a turtle soup, okay? Turtle soup is an entry model that many people pay a lot of attention to. But we're not going to talk too much about that. Instead, we're going to focus on how to select the correct CRT. To enter a trade, you can do it from some fair value. There's no real need for a change in structure. You can do whatever you want, it doesn't really matter. What truly matters is how I know which candle I want to trade, which range I want to trade. And that's what this video is going to be about. How to define the range, how to define the candle. And to do that, we need to look at certain kinds of parameters, right, that we want to analyze when identifying our CRT. Alright, first of all, we need to talk about the key aspects of CRT. What we're going to do is define certain rules or protocols to apply this properly. In order to work with CRT correctly, I need you to follow all of these protocols. When dealing with the third candle, that is, the distribution, you should not try to trade beyond the manipulation, because that can seriously damage your win rate. If you follow these 3 simple steps correctly, you can achieve a very high win rate. That being said, let's talk a bit about what those steps actually are, meaning the protocols that we need to follow. Perfect. The first protocol we're going to follow to apply CRT is to find a lower time frame CRT within a higher time frame CRT, okay? What do I mean by this? In this example, right, I found a CRT here with the 2 a.m. candle, okay? As we can see, this is my range. The following candle manipulated the low of this candle and closed above it. Therefore, my DOL would be the high of the range. In other words, I expect my third candle to distribute, right, to the upside. Perfect. But I'm not going to trade here. Here we can see in this table that I left, which shows higher time frame and lower time frame, how we're going to identify it. Since we're on the 4-hour time frame, right, I can infer that I'm going to need to look for a lower time frame CRT on the 15-minute chart. If I drop down to the 15-minute time frame, my trading session starts at 10. We're going to identify, okay, our lower time frame CRT. And what is going to be the rule to identify a lower time frame CRT? We're going to look for a large candle that takes up a lot of space on the chart, so to speak, something very bulky. In this case, this 15-minute candle is going to be my lower time frame, meaning my lower time frame CRT. In other words, this is a range that we can already work with by itself, a lower time frame CDRL, okay? And if we're on the 15-minute chart, we're going to look for an entry on the 1-minute time frame. Okay. So price starts right here at 9, right? Within my trading hours. I'm already expecting a bullish move, so I simply need to look for confirmation. What kind of confirmation is this going to be? It can be an order block, an inverted fair value gap. For example, here we can see that this fair value gap was inverted. At this point, we could already buy. Let's say we add a position here, right? We buy, we place our stop loss below these lows, and our take profit target can be all the way up to the candle range high, which would be this point right here. I'm going to move it a little so it's easier to see. And in this way, we have an excellent trade. Here we could take partial profits and wait. Price then gives us another opportunity to enter, right? Which would be the creation of this fair value gap on the 1-minute chart. We also have another opportunity, which would be this 1-minute order block as well. We buy again. We don't move the stop loss, and eventually price is going to start distributing to the upside toward our DOL. And you'll see that this strategy works extremely well. At this point, break-even should already be set because we reached the high, right, of the lower time frame candle range. Now we should wait a bit for price to give us the opportunity to continue moving higher, all the way to the high of the range that actually matters to us. I'll speed the chart up, and there it is. On this day, we would have taken an excellent trade, buying at the low, right, and distributing all the way to the top. Okay, this is the first protocol. Remember that this is it. Table, right? Write it down, review it, backtest it, because this is the table. These on the right are the higher time frames, and the lower time frames are shown over here. As you can see, even on the 15-minute chart, we can identify a candle range, a CR. And why is that? Exactly, because the market is fractal, and this model works on all time frames for those who are interested in scalping. The second protocol is to ask ourselves when CRT occurs. In other words, what is the time window in which we can identify the candle that is going to become our CRT? For that, we have these parameters. Most of the time, CRT happens on Mondays or Fridays. The candle forms at 5 p.m., 9 p.m., and 1 a.m., at 5 a.m., and at 9 a.m. It's important to remember that time is much more important, no pun intended, than price. That is, it really matters to us that our CRT occurs at one of these specific times. The Monday and Friday aspect is not absolutely necessary, but the timing itself is extremely specific, okay? We cannot apply CRT if it is not aligned with these time windows. This is extremely important. If we also combine this with the previous parameter, your win rate will truly skyrocket because it works very well when both protocols are used together, okay? Look at this and notice that CRT always occurs at these times, right? At 1 a.m., at 5 a.m. Another important point, for commodities like gold and for indices, the times are 6 p.m., 10 p.m., meaning 10 p.m., and 2 a.m. No, that would be 2 a.m., okay? And also 6 a.m. and, if I'm not mistaken, 10 a.m. Those are the times for indices, futures, and commodities, okay? It's important that you pay attention to that as well. For example, we can notice that in the example I was just giving, the CRT occurred at 2 a.m. for commodities, because I'm on gold, okay? My CRT was exactly there. The CRT candle was at 2 a.m., okay? It's important for you to know this too. So that already validates, right? Two very important points for this CRT example. How was my higher time frame CRT? Exactly. It formed at a model-specific time. In other words, at 2 a.m. my CRT formed, okay? This is extremely important and must be taken very seriously. Write it down somewhere, note it, and study it. Let's move on to the next parameter. Alright, the next protocol is, at what time do we expect the purge? In other words, the manipulation, the second candle. When do we expect it? Well, if our CRT is on Monday, we expect the purge to happen on Tuesday or Wednesday. And that's one of the reasons why it's always said that Tuesday creates the high or the low of the week. If it's on Friday, then our manipulation should happen on Monday. If it's a 4-hour candle, meaning a 4-hour candle that forms at 5 p.m., then my manipulation should occur at 3 a.m. Remember, again, that if we're dealing with indices, futures, or commodities, we simply need to add 1 extra hour, because the 4-hour candles are offset by one additional hour, okay? If the CRT is at 2100, right? Or at 2200 in the case of futures, indices, or commodities, we expect the manipulation to occur at 100 or 500, or for indices at 200 or 600, okay? And if it's a 4-hour candle at 5 o'clock, we expect the manipulation to occur at 9 o'clock or 11 o'clock in the morning, okay? This is also extremely important. Obviously, if this is futures or commodities, then we would say that for the 6 o'clock candle, the manipulation should occur at 10 o'clock or 12 o'clock p.m., okay? So that we can see this a bit more clearly, if we look right here, we can see that our actual manipulation happened exactly at 9, as we can observe. There was an excellent turtle soup here, and in fact later at 10, we can see that price performed another turtle soup, which finished distributing price to the upside, okay? It's very important to stay aware of the manipulation times. All of this has to be combined, okay? Let's remember that the purge or the manipulation is the turtle soup. That is, when the candle sweeps liquidity and then closes bullish. That's what we're interested in, okay? This protocol is extremely important, extremely important. The next key question is, am I inside a higher time frame PDA array? As we can see in this CRT right here, we can observe that we are inside a 4-hour fair value gap that is still being respected. In other words, this condition is met. And the final protocol is that my lower time frame CRT must also be inside one. I'll note it here. I am inside a lower time frame PDA array. If we drop down to the 15-minute chart, we can see that the CRT we were expecting at 9, right? From our candle, which is quite bullish, should be inside one. This is my bearish CRT. It should be inside a PDA array, and the truth is that it is. I am inside an order block here, right? Which is going to be responsible for pushing price. In fact, it even managed to take these lows. Let's remember that lows and highs are still PDA arrays, right? In fact, I think it even managed to touch this fair value gap. In other words, I am inside a PDA array of the same time frame. That's what this refers to. That's what I mean by being inside a higher time frame PDA array, which would be this 4-hour fair value gap. And at the same time, having the purge on the lower time frame occur inside a PDA array, right? Either of a lower time frame or of the same time frame that I'm using to look for my lower time frame CRT. And that's it. Honestly, that's all CRT is about. You don't need much more beyond these protocols, and here are a few tips. The first one is, don't try to guess which candle is the CRT, okay? Don't try to look at it and say, this one might be it, or that one might be it, because it doesn't work like that, all right? Second, these protocols exist for a reason, so use them. Use them when you're looking for a CRT, otherwise, this simply won't work. And I'm telling you right now, it will not work if you don't use them. And the third tip is to trade CRT only after the manipulation candle, in this case, the 6 o'clock candle, has already closed. Don't try to trade CRT here, because once again, your win rate will decrease. And what you want is not a low win rate, but a high win rate. That's why certain rules are created, and those are rules you need to follow, okay? That would be it for the CRT video. Let's remember, once again, that this is nothing new. This is information that already exists, and there is nothing special about it in terms of being the holy grail of trading, right? In fact, we were able to see that we simply extracted the direction of the third candle using the intraday device, which is what I taught in the last video, right? And well, now at the same time, there's a way to trade, right? The third candle, which would be the distribution candle of the CRT. So that's it. If you have any questions, you can leave them in the comments.